morning, everybody. It's Wednesday, May 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight, markets had July corn down a penny at 4.45 3/4. July soybeans were down 2.5 at 11.60 and July Chicago wheat was up a penny 3/4. It's 6.05. Nothing in the way of export sales announcements here this morning. We did have private payrolls out. They were up 192,000 in April, which was slightly better than expected. So the first sign of maybe some positive outside market news. We will have the Fed here today, later this afternoon. By most expectations are for no action this month. I think the key will be watching forward guidance in terms of what they're, talking about in terms of rate cuts, out forward. I think they're still on the 1 to 2 cut program, and we'll see if anything changes on that front. So with that, kick it over to the guys. I know we were talking early this morning just about yesterday's administration announcement on the SAF subsidies. By all accounts, digging into it, it appears like it's kind of a kick the can down the road type of an announcement. By our account, most growers, are not going to qualify based on the requirements of, having to be no-till, having to use cover crops, in addition to using enhanced efficiency nitrogen programs. So looks like maybe 25 is when it'll first come to fruition. Justin, maybe elaborate a little bit on that, and then we'll kick it around the room to the rest of the guys.
Yeah, thanks, Dan. Admittedly not an expert in this. We do have some good contacts that deal in this directly. It does sound like this is, kind of a nothing burger, as we talked about. It's, this 40B guidance is for 23 and 24. It's not like anybody's making SAF anyway in 24. And so really it's this 45Z that's going to be 25 through 27. Which is, depends on how much, that changes. So the way it's written now in this first one, it'd be really hard to qualify. They kind of bundle, 3 practices together, which, very few acres, do on the same, or very few farmers do on the same acre, right? So it's no-till, cover crops, and efficient fertilizers. So they kind of bundle all 3 practices to qualify. So it's really, it really doesn't matter to most growers. I don't think a lot of growers are going to switch to those all 3 practices to qualify. So it's likely going to change. And I just don't see anything in here exciting. It's more just, past the election and not surprising for the administration.
Yeah, right. And we did see yesterday late into the morning that the Argentine strike is over. So you commented that perhaps a little bit of meal weakness on the open was reflective, but that administration over there in Argentina did get some executive powers, and it would be interesting to see what changes, in terms of policy for this new administration that they've got over there.
Yeah, 100%. And I was talking about this yesterday with the guys, but notice meal, soybean meal volume was a record for the contract yesterday. More than beans. So we saw a massive unwind of oil share, where meal value gained relative to oil. So a huge 2-day move, I think, going into this biofuels announcement and with the Argentine strike. What that means to the grower, and I'm not really sure it means anything, but just kind of interesting trade, and, kind of goes more along the lines of just the volatility and the size of these traders. And if you look at, start looking at the monthly volumes of all of our stuff are hitting records, even though there's really not a story going on right now, which I think is pretty interesting. There's, looking at some of these big years that we had, over the last 5 or 10 years where we've had, the massive trade wars and droughts, where they had real stories, and we're breaking those records on volume for several of our commodities. So I think that just kind of, underlines the fact of this powder keg type thing that we always have as we keep building volume. When something does happen, good or bad, it can have dramatic effects in a short amount of time. So to give an example, meal versus oil moved over $5,000 a contract in a little over a week. right? So that's the equivalent of $1 a bushel.
Wow.
If you think of it that way. So, big moves, and it's probably not on a lot of people's radars because you guys don't grow meal and oil, but just some of these intercommodity spreads and how fast they move. I think that just a precursor to some volatility that might happen if things get good or bad.
Sure. Ben, thoughts in the East here this morning?
Southwest Ohio really had a good run of planning. South of I-70 moving along well, still wet. Northern Ohio, Northwest Ohio, Northeast Indiana. Basis has been firm, but it's a tale of two different locations right now as far as planning and not getting planted done. Farmers in Northwest Ohio, North Central Ohio. I have one guy there who's planted 40 acres of beans, and that's it. The rest of it is just kind of uneventful. I would comment on what Justin was saying too about volatility and the increase in volume. I think that a lot of that too is the advent and kind of evolution into electronic trade, where these participants that are your players or your traders, they can shift from one commodity to another really, really quick if they see something happening. And I think that lends itself to that kind of momentum building. And I think it's something that we have to live with for a long time. And it can be really something in a market that has an initial position that is the wrong way. Kind of on a lark, we see money flow from one place to the other, and they don't always have to have a correlation to the commodity that you're looking at from a fundamental standpoint. But if they decide that they would rather own X than Y, it can happen really quickly and really violently, and drawing people that don't normally trade X or Y into that arena.
Yeah, Ben, just kind of funny story on that. So I was at an event about 10 years ago. This is when wheat was going crazy, it's $15. And anyway, I was at an event and I met one of these big traders that work for one of these quant type groups. And he's telling me a story about how the manager of the trade, the trade desk came out and said, who has ZW positions on? And everyone kind of looked around like, ZW, who's got ZW, right? Which is the symbol for wheat, electronic wheat. And then finally somebody said, what's ZW? And they're like, so it's wheat. And some guy raised their hand and he's like, well, how much do we have on? And he's like, well, we got about 20,000. They didn't even know. They just knew it by the symbol of ZW.
Yeah, there you go.
And so just to your point, it's electronic markets, it's momentum, it's indicators. They don't care what it is. It's just it was ZW. And I just kind of shook my head as someone that was involved in it.
Yeah.
as a fundamental guy. But
there was a former well-known wheat options trader, not myself, and he referred to it as putting on units. That's how they look at it. They don't think of it anything else. It's just a unit.
Yep.
And I think one of the things that I'm like, I don't sit here and fawn over it every minute, but I think about it multiple times daily is, what if we were to see a larger move out of equities into physical commodities? We could have a really a volatile play. And that did happen in whether it was 07 or 08, but we did see that happen. And just always something, humility again, in what these markets can do in a brief amount of time. If someone gets the tick to get out of ZW or Z, whatever it is, right?
Yep.
And I thought we have, obviously we do a weekly call with, some of our commercial partners, Ben, and I thought that there's a kind of a unique situation lining up in the East with the wheat and some of the folks that are wheat houses, that are going through changes and things like that. I don't know if you want to elaborate a little bit on that. I thought that was kind of an interesting point they made yesterday.
Yeah, there's one of the larger facilities that takes wheat in the fall, and an incredible amount of SRW grown in Indiana and Ohio. It's closed for a year-long renovation, so that takes it off of kind of offline. In addition to people still holding quite a bit of corn, it could create a kind of a logistical backup as wheat starts to be harvested this year. And by all accounts, at this point, the SRW crop is going to be very, very good. So I think that creates another kind of a pinch point for moving cash grain. And we mentioned on here before that a lot of the destinations in the east winds up in the southeast to feed animals there. And they have not been large forward buyers because markets are carrying. They can go in there and get it as they need it. And they think the market's going to come to them. And to this point, they've been right. So still a tremendous amount of grain taking up storage where wheat might normally go. One of the larger facilities that takes it's not there. And we're really, we need to see more business, whether it be corn or wheat. The bias on that call, listening to one of our commercial partners, was that the farmer's going to have to make a pretty tough decision here on are they going to dump their corn to store their wheat, or are they just going to dump their wheat? But they're going to have to do one of the two, most likely. So,
right.
And that's been a story for, right? That kind of was the story when corn harvest was going on, wasn't it? Because they had a big wheat crop last year. They had to dump wheat to make room for corn, and it's kind of same decision. So
yeah, I think that it makes a really tricky proposition for a grower holding corn. Not having a plan, logistical plan, basis set. Sometime between the first week in June and mid-May, because if this crop looks like it's going to turn out well, there's going to be quite a bit of corn that has to move. So
that's a pretty big change in the last 10 years, right? You've had really, really strong basis in the East for years and years and years. And it's kind of probably didn't really pay as much to have storage because you always had great basis opportunities.
Yep. Well, and this year is really, it's a flip of what we've seen from the East to the West. The East is, for the amount that it's produced, is very processor centric. A lot of areas are corn deficit areas. And it really has to kind of broaden out and widen that amoeba of a draw. And a lot of times it can be supplemented with rail. And this year, there's 65 million additional bushels of corn in Ohio year over year. So that really softens up any of that, coupled with the fact that the typical kind of organic bid from the Southeast has not had to be very aggressive. So the rail market has not moved out the same amount. So commercials had corn to move as well. So I think it becomes very tricky. I would not want to be setting basis, in late June or July if we feel like we have a really good crop coming in, because someone's going to have to figure out where all this is going to go prior to the fall.
That's very good. Something we'll certainly be keeping an eye on. We got a couple minutes here before we come into the open. Rylan, yesterday, real soft opening on the heels of news that they're going to be testing raw beef samples. I think the market was a little bit spooked on the open, but just give your 2 cents and what you're seeing in cattle.
Yeah. As you said, the USDA is now testing actual beef samples for bird flu. I think the market just, every time one of these headlines has come out that pertains to bird flu, all cattle market's been selling off. So it seems like there's just kind of a knee-jerk response to the headlines right away. And like we've seen this before in previous years, I know online there's been a lot of comparisons to pink slime and the BSE situation. The market definitely gets really concerned for a short amount of time. Usually these things kind of shake themselves out, and you kind of go back to the more fundamental aspects, which some are better than others, of course, right now. But, as we've seen so far, it's been pretty light cash trade, 185 on the live, 294 in the dressed. So I think that's something to keep an eye on. I think the bigger concern is that beef prices really aren't getting their feet out from under them. We're not seeing this nice seasonal rally. So I think that's something that's causing a little bit more concern, especially on the cash side of the market, and questions that prices can hold up. But we've got the big discount on the board. So it's hard to say which is right, but these are some pretty negative indications. Overall, I know there's a lot priced on the board, but I think we're just going to trade kind of the day to day, to be honest. And I like I said, the knee jerk response to these things is always kind of and the question marks that start to pop up with disease issues and these kind of scares, are a lot of the times a lot worse than the reality. I think what everybody's waiting to see is that, a positive test comes back, or there's some kind of beef to human transmission down the road. These are the fears that the market's going to be trying to price in just in the near term.
So Ryland, I had a question on that, not to interrupt you, but if you compare these to like mad cow or some of these other things that we've had in beef, the reaction was stop eating beef and eat poultry, right, by the consumer.
Right.
But when it's bird flu, like what?
Yeah.
How does a consumer like? How do you think of that as a consumer?
I don't know.
Do you start eating more poultry?
I guess
cattle.
Pork is where you go right now. It's probably the safest thing if you're really worried about the headline trade. Just ostensibly, but I would say that we've seen it in the past. Yeah, you see, people worried that people shopping at grocery aisles are just going to completely pass up beef and just take any kind of alternative. Whether it be chicken, whether it be beef. For some reason,
you would buy chicken when it's bird
during a bird flu outbreak.
You're not worried about bird flu in birds. Well, you're worried about bird flu in beef.
Right. So I don't know about the testing regulations that happen on poultry, retail poultry, or chicken breast, or even on the pork side. But I imagine that obviously the focal point is beef right now. So I don't know if there's a conspiracy theory or something, because we've got record high prices, at the meat counter. But one can draw a lot of conclusions from this kind of thing. But yeah, the outside meats are, obviously the high beef prices help support these prices from a retail level. So we'll see if there's any kind of consumer changes. It's just that's something that we're not going to know for quite some time, which is why I say the market usually kind of shakes it out. I was just in line at McDonald's. I didn't see anybody, panicking that are double checking their burger as they were getting it. So.
Very good. Appreciate the input there. We just came into the open. We got July corn down $0.0125, 445.5. July soybeans are up a quarter, 1163 is the last. And July Chicago wheat is unchanged at 603.5. Tomorrow morning, we will have export sales out. We'll talk about that in the war room. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks for all the thoughts and comments here this morning, guys. It was a good conversation. I hope everybody has a great day, and we look forward to talking to you tomorrow morning.
Thanks, Dan.